Think you need 80K or more to buy your first rental property? Think again. I'm revealing the exact strategies I use to break into real estate without draining my bank account. Stick around because this is the key to your financial freedom. Hey everyone, welcome back to my channel. If you're new here, I'm a project manager and a real estate enthusiast. I'm sharing all the tips to help build your wealth and escape the rat race. Real estate has been one of my biggest game changers for me, and guess what? You don't even need to be rich to get started. Today, I'm breaking down what you can buy your first rental property without needing a massive down payment. First up is the Federal Housing Administrative, or FHA loans. These are government-backed loans allowing you to buy a property as little as 3.5% down. So let's just say $400,000 property, that would only be $14,000 that you need to be saving up as compared to in $80,000 with the traditional 20% down payment. In 2022, over 1 million homes were financed with an FHA loan, just showing how popular they really are. Plus, these loans are typically require a low credit score of 580, so the threshold is very easy to get in there. Just talk to your local loan provider, or I'll provide some links down below. Next up is house hacking, my favorite, and that's kind of how I got started here. So imagine you buy a duplex for $300,000 with that 3.5% FHA loan that we just discussed. That would only be about $10,500 down, which would be huge. You'd live in one side of that unit. You'd rent out the other side of the unit for maybe $1,200 a month with a mortgage payment of, let's say, $1,800. That would be a rental income to cover you at least 2/3 of your cost while you're still living there. You know, according to Bigger Pockets, house hacking can save you on average of $10,000 to $15,000 annually in house hacking expenses. This is honestly one of the fastest way to lowering your cost of living as well, by reducing that huge expense of the mortgage payment. Number 3 is creative financing, is how many real estate investors really get started in this. Take seller financing. This eliminates a lot of traditional bank loans, and down payments could be as low as 5% down or nothing if you kind of seller finance certain aspects of that. So consider maybe like a HELOC. If you have $50,000 in equity of an existing property, you can borrow up to 80% of that, giving you maybe like $40,000 you can use as a down payment. Another thing is partnerships are a huge thing. So sometimes you take on certain investors, maybe your friends saying, hey, you know, I'm looking at buying this rental property, you want to come in? You know, 47% of the first time investors usually use family or friends to pool money together. And that's kind of how they get started to kind of invest in their real estate journey. The number 4th thing, and it's probably not going to be that popular, is the location where you buy your rental property. So in 2023, Rent Cafe did a study and found that cities like Cleveland, Detroit, Kansas City offer a lot of affordable housing with prices that are under $200,000, and the rental yield is above the 8% threshold. So choosing those properties over there might need a little fixing up. You can make a huge return. So let me give you an example. So an example of a $150,000 duplex with a $250,000 monthly rental potential offers a much higher return than a $400,000 single family home rented for $2,000 in a larger area. So it's all about the property type and the location where you buy this property. So it's up for you to decide where you want to buy. Number 5 is I'm going to talk about the saving strategies and debunking any myths that you've heard. So a lot of states actually offer down payment assistance programs. That's actually how I bought my first property. North Carolina, the state of North Carolina, actually had a program that allowed me to have, put towards my monthly down payment. So I had a lower down payment as part of that. So, sometimes they can grant up to $15,000 and some can eliminate some interest. So there's a lot of different things. I'll provide several links, but this kind of allows first-time home buyers to get into real estate just starting out. Another thing is PMI, and you're probably wondering what PMI is, but it's the private mortgage insurance. It's basically allowing the insurance company claim that you're a risk, that you don't have 20% down. So just let me give you an example of a $200,000 loan that you purchase. On average, the PMI each month is going to be between $70 and $150 a month. So obviously that's going to be right around $1,800 or $800 a year that you actually upfront the cost. But let's think rising over a 5 to 7% annual appreciation, it far outweighs the cost of PMI. So it's a very small fee to take on when you build in real estate. So all in all, you really don't need to be a millionaire to start investing in real estate. Just using FHA loans, house hacking, creative financing, or other methods allow you to buy that first rental property. If you like this video, like, subscribe, turn on bell notifications, and let me know in the comments what video you'd like to hear next. Let's make 2025 the year that starts building wealth.